Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. Today, I want to talk about the profit and loss statement, how to understand it. Many times, we in the business sector, coaches, lenders, we say manage your finances, look at your financial statements. Today, I want to give you tips on how to understand your profit and loss statement. So, this is part one. We're only going to focus on revenue. So I am in QuickBooks. This is a sample company, and this is a profit and loss statement. You can use, this is similar to any other type of accounting software. So when you run a profit and loss statement in your accounting software, it usually comes up like this, just everything that's in total. It may just be for 1 month or maybe for the whole year. Number one, when you're dissecting your profit and loss statement, I recommend you actually look at it by month. So I'm going to go over here in QuickBooks and expand it so I can actually see each month. So that's number one. Because what we're going to do, we're going to look at the trend first. So with your profit and loss statement, number one, make sure you're looking at it by month. You are looking at the trend. So your particular business may have a different trend, a different season than other businesses. So this particular company is Craig's Design, Landscaping, and Services. So with their income, in January. So they do landscaping. So let's just say they live in Chicago. Well, in Chicago, it's cold. So there's not going to be much landscaping going on. So their revenue should be pretty low. So if we look at their revenue section, and they call their revenue section income section. So they have design income, they have some discounts here, they have landscaping services where they generate revenue from, also job materials. So this is where they sell materials. They have labor, they charge for their labor. And then let's see what else. They have pest control services and sales of product and income. What you're looking for in your revenue, this is where you have to know your business. What is the trend? What are you looking at? So if you're expecting revenue to be 1,000, but January only came in at $521, and that means you need to go back and say, okay, what went on? Were there some external forces that did not allow you to generate revenue? So for instance, if you're in landscaping and it's January, of course you may not make $1,000 because it's cold outside. So number one, look at trend. And what I mean by trend, look at each month. So in this particular situation, in January, job materials, they sold $431. And in February, they sold $847. Then in March, it was $3,327. So as you can see, there's a trend. It started off low at the beginning of the year, then it increased, and maybe because it's getting warmer outside. So that's what you want to ask yourself. Say, okay, what is, first of all, what is your goal for your revenue? Did the actual revenue meet your goal? And what's the trend? Also, you want to know where that revenue is coming from. So if you are offering more than one product or service, you want to make sure you have different revenue accounts. So for this particular company, they have landscaping services, they have job materials, and they have labor. So once again, if you're offering different products or services, you want a revenue account per product and service because you want to look at your revenue and say, okay, what item brought in the most revenue, why, and what product or service brought in the least and why. Also want to show you a tip. So many times when we look at these financial statements, this just looks like numbers. But say, for instance, we want to know, okay, what is this 3,327? Who did we sell to? And we can look here. I clicked on that number, and here are the invoices behind that number. So I call this peeling back the onion. So let me go back here. When you're looking at your revenue, and this is with any financial statement, peel back the onion, click on this item. And even if you don't use QuickBooks, you can still do this. So click on that number and see where those sales are coming from, because this allows you to know what customer is buying and then what customer is not buying. Very key. And as you can see here, for plants and soil, we had Hicks Hardware purchase something. We had Cool Cars. We had Freeman Sporting Goods. And you may say, well, I don't see so-and-so customer. That's where you can go back and see if they purchased anything. And then if they didn't, you can go back and ask why. But this is what you need to ask yourself when you're looking at your revenue. Number one, what's the trend? Where is the revenue coming from? So what product and service? And then lastly, who is buying? Because this allows you to strategize and say, okay, for the following month or months, I need to focus on this product or service, or I need to focus on this particular customer or customer segment. So hopefully this is helpful for you. And let me go here. Another item regarding the revenue section is the cost of goods sold. So if you are producing a product, you should have an account cost of goods sold. And that's important because if you are making a product, you are purchasing materials, and that material is going into your product. That material needs to be subtracted from your revenue. So for instance, let's just say I need to build a lamp. That lamp, I sell that lamp for $100, but I purchased the materials for $90. So I only made a $10 profit, $100 minus 90. You want to make sure if your product base, you're looking at your cost of goods sold. Then you're also looking at your gross profit. Gross profit is basically just what I just discussed. It's your revenue minus your cost of goods sold. You want to know what is your profit. Once again, there is no law or rule on what that gross profit is. Now, there may be certain sectors who say, well, your average gross profit should be this. It's your preference. So, of course, you don't want your gross profit to be like $10 because then that means you have to sell a lot. But if your gross profit is $60, $80, that's a good amount of profit because you're actually spending less and selling, getting more money back from that. So those are some important things regarding revenue also. So let's go back over that section again. So look at your revenue. Some accounting software call it income, like here. You also want to look at your cost of goods sold, and you want to look at your gross profit. So I know this is usually a lot for those who are not, non-finance folks. But once again, as the more you look at it and start asking yourself the questions yourself, you'll get familiar with it. You'll get more comfortable with your financial statements. So this is part one. The next session is going to be regarding expenses. Take care.